Okay, here we go. You and me, people, back together again, and we do really have to talk. A lot of stuff going on. Interesting movement here in the bond market. Risk here, all kinds of things. So let's sum this all together here. So this is my post-market wrap-up on this Wednesday, November 17th, 2021. Let's start off with the debt market. What do we know about the debt market? Well, I've put this in several different contexts over the years. Number one, realize what you're looking at. When you are looking at the bond market, the 10-year yield more specifically, this is the benchmark. Everyone looks at this. You got to look at the whole curve, absolutely, the yield curve, but the 10-year yield is key. You are well aware of that if you follow my work. Now, we have a situation here where the Federal Reserve has been buying treasuries like there's no tomorrow. And again, they realize where this is going, keeping rates suppressed for now over an entire decade. The debt market is a ticking time bomb. It is going to go off with such a ferocity at one particular time that people are not going to know what happened. Seriously, that's how it's going to play out. Let me put another perspective on this for you just real quick. We all understand this is insane. We have inflation surging at its fastest pace ever on record. The consumer price index, the rate of inflation, is about 6.2%. Meanwhile, the 10-year yield is paying about 1.6%. Does that make any sense to you at all? No. So again, if you just want to look at the entire yield curve, well, let's just look at the 10-year yield here. You want to base that against inflation, you're getting robbed blind. You're guaranteed to suffer a massive loss with regard to purchasing power if you're invested in something like that. You got to be kidding me. This is how twisted this environment is. And subsequently, we have watched a stock market hyper bubble, just build on the back of the debt market hyper bubble. It's out of control. And again, like I said, the debt market is a ticking time bomb. It's a Frankenstein monster that when the implosion occurs, mark my words, when the implosion occurs in the debt market, what can I tell you? It's going to be biblical, like I say all the time, biblical. And all of the distortions which now exist in this market they're going to, what's the word here, correct, normalize, whatever it might be, so dramatically. There's going to be a major over correction here, and there's going to be a lot of money to be made, a lot of cash to be made when this happens here. And like I always tell you, it doesn't matter really what happens in this market if you're in the right spots, being hedged, understanding where the market is going here, being in risk-on assets and risk-off assets, the things I tell you every day. You understand? So you don't have to worry about dramatic moves in the market. And I mean dramatic, because we are going to get something, again, biblical to occur at one particular time. There's just no doubt about it. Anyway, I was writing down a few things today. We'll get to that in a moment. Let's talk about this market today. Some very interesting happenings. As you know, if you've been watching this video blog, as of late, I've been explaining to you that risk is rising. And we can see this in real time, people. It's the MMRI. It's really the indicator, I think, of all time, in my view, with regard to gauging risk. Now, yes, we are still in the green. As you all know, it's about 95.5 the last time I looked. We dipped a little bit from this morning. We were like 97.7. I don't like it here. I've said this repeatedly lately. I would like very much to see the MMRI below 90 in this environment. Okay? The MMRI is a tool. Okay? It's not the end all. It is a tool that we will use to make our best decisions as to what we are going to do with this market and the economy as a whole, so we can have an understanding of what we can expect. You understand? You must look at a lot more to it, and that's really what I do. Again, I'm a global guy, a big macro guy, and I try to balance these things out and enlighten all of you as to what I see coming down the pike. And again, if you've been with me for any length of time, you have to say that it's pretty astonishing, the stuff that I've come up with. Am I right all the time? No, definitely not. But it's very hard to argue that my own personal research and work has not really made me correct the vast majority of the time. The market is it changes all the time. All right. And that's one factor here that, it's very, changeable. Okay. So we need to keep on top of all this all of the time. And we have to be willing to adjust our perspective as well very quickly. Very quickly. That's the difference between what makes someone a successful investor or trader and someone who isn't. They're unable to change or switch and say, hey, you know what? This has changed. So now I got to, rethink my strategy. For now, you and I aren't rethinking a darn thing. We are staying where we are, despite the fact that today, again, going back to the action here in the debt market, the entire yield curve came down today. The dollar slightly lower, stocks lower. It looks like a fear trade to a certain degree, except we're not seeing that knee-jerk higher in the dollar. Again, we're talking about relative value, people. Relative value, the dollar or the Dixie, which is a factor in the MMRI. Relative strength of the dollar got weaker today. But we can't ignore the fact that we saw the entire yield curve drop today, including the 10-year yield. At the same time, stocks drop. I explained to you risk is rising in this market. It is certainly possible. The market is smelling something. Look at crude oil today. Okay, crude oil down by about 2.8%. Crude oil falls, stocks fall. Okay, you know how this works. It's an incredible mechanism. It's virtually never, in fact, never spoken about on the mainstream news channels. They can't allow you to realize the direct connection between crude oil and this market. Crude oil is just, it's out of control right now. And it's massively, in my view, overvalued. I've told you this since time immemorial. Sure, we're around $78 a barrel right now. This scares me, okay? Even though crude oil, in my view, has no business being where it is right now, the mechanism of the propping up of crude oil is diabolic. Okay, it really is. And what you need to start looking for, and it's already popping up if you were to search the news, when crude oil falls like it is now, if it falls lower, like again, look, no asset goes straight up without a little drop or a pullback or, wavering around a little bit. Sometimes assets trade sideways for a long period of time. Now, we went from like $86 in crude. Now we're about $78 in crude oil. When crude oil falls, people die. That's a fact. You will see, again, false flag events. For example, a refinery fire, a pipeline disruption, a U.S.-backed airstrike, skirmishes, wars around the world. Things that will cause crude oil to rise in value, okay? None of this is by accident. It's a phenomenon that occurs repeatedly whenever crude oil falls. When crude oil is high, you don't hear nothing. There is no refinery fires miraculously, no missile strikes, no terrorist attacks, no pipeline disruptions, no U.S. airstrikes on anything, U.S.-backed airstrikes. It just doesn't happen. When crude falls, yes, these things happen. So start to watch for a false flag event, maybe multiple false flag events, something to prop up crude oil. All right. Let's talk about precious metals. Doing okay today. Put on a game. We got cryptocurrencies under pressure. Bitcoin still over 60,000. Okay. A lot of people calling for a big pullback with regard to crypto. Some people say no. Me, I say good. If it pulls back, well, you know what I'm going to tell you. Do I need to say it? I would be buying that dip. Period. I will remain a buy the dip guy pretty much across the board until things change really dramatically. Okay, this system, this strategy that I have outlined for you for a very, very long time has worked very, very well. It's hard, again, to argue against it. There is going to be a point, no doubt, where it's not going to work. But we're going to have clues, people. We're going to have clues. Again, let's go back to the action today in the debt market. Yield curve came down. 10-year yield came down. That, to me, again, and to you, that those of you that understand the market, that's fear, okay? And we don't need to worry about fear in the market because all fear is going to do is present opportunity, okay? Fear, cash making its way into the debt market, yields come down, stocks come down, boom, buying opportunity. You understand? And you can count on crude being propped up again. This just, in my view, no doubt about it. But the real thing, what we are going to watch for, is the inevitable implosion. And I can't stress that word enough. In freaking implosion, which is going to occur in the debt market. And that's going to cause rates to spike at an uncontrolled, rapid pace. You understand? And that is going to put enormous pressure on the stock market. You're going to get a massive sell-off in the debt market, a massive sell-off in the stock market, and cash is just going to move, people. It's going to move from certain assets into other assets. How many times have you heard me say this, if you've been with me? Commodities are going to the moon when this occurs. Gold, silver, especially highly undervalued, massively undervalued assets. I think cryptocurrencies are going to benefit as well. And I think it could be shocking. All of these things, how it's going to occur. And understand, what you're witnessing here is nothing, and I mean zero, is by accident. We have central banks around the world continuing to buy assets. A runaway central bank here in the United States, the Federal Reserve, determined to buy it all. They want to buy it all. This is, people, do some of your own research and reading into central banks, why they were actually established, what their end game would eventually be, and you are going to be shocked because you're seeing it all unfold right now. That's the truth. All right, look, people, let me look this over here. I did write a few things down. I covered most of it already here. Just keep your eyes open. Pay attention. No fear, okay? None of this should scare you, okay? Because you already know what's going to happen. I'm telling you. How many times have I said something and it happens? All the time? No. Most of the time? Absolutely. Kind of hard to argue with that too. All right, people, look, this guy loves you a lot, and I mean that. And let's keep it together like we always do. I will see you in the morning. Please share the video. I always appreciate that thumbs up. Makes me feel good. And, well, that's it. See you in the morning.